is one theme that everybody is talking about. Do you have any favorite bets as to how to play that theme?
On particular stocks, but to your point about which sectors look good, healthcare looks good, real estate looks good, and then there are these individual names within the technology domain. Those are also starting to look pretty attractive.
Anil, we were cheap and markets are up. We are no longer in the value zone. If one is buying markets or investing in markets now when the P multiples are just a shade below its historical, just a shade above its historical average, what kind of return expectations one should have?
See, clearly, I mean, I mean, just to step back in time, there was a time when during the, let's say, 2013 onwards till 2020, there was this quality movement where perhaps the focus shifted away from the valuation and it was mostly concentrated on market share growth, etc., etc. At that time, valuation did not matter so much. But Nikunj, to your point, now valuation is playing a very important role because, as we all know, the cost of money has gone up and it has alternative uses. So people are being very, very finicky. I mean, your return expectations have to be moderated because the interest rates are high. If for whatever reason interest rates start coming down, then obviously, there would be some kind of an upside and you could tolerate a little bit higher valuations.
Aurobindo Pharma, does that ring a bell? Once upon a time, we used to be looking at this stock a lot, owned by Rakesh Jhunjhunwala. Some of the biggest marquee funds were there. Why am I bringing it up? Not to start a stock-specific discussion with Anil here, but just to mark that from the recent low, sub 400 has become 600. That's how strong the comeback in Aurobindo Pharma has been from the recent low. We are not realizing it, how strong the pharma stocks have recovered. Let's look at the YTD change here. Even a 1 year change or a 52-week change, all of them in a sense will encapsulate the point I'm trying to make here. Aurobindo Pharma, Dr. Reddy, Lupin, Biocon, some of these stocks sub 400, Nisha? Sub 400 for Aurobindo Pharma is now 600 plus. Flip it with a Cipla, Dr. Reddy, Zydus Wellness. Anil, 2021, it was only pharma. COVID beneficiary benefits were coming because China was not exporting. 6 months ago, everybody has written off pharma, and now pharma is coming back. Where is pharma actually headed?
No, there is a valuation catch-up going on, and you brought it out very well, stock after stock. But the issue regarding, the golden goose, that is the American market becoming a much tougher place, that issue still remains. So there would be a catch-up. There would be, I mean, perhaps they were oversold. In fact, they were oversold. And to that extent, there is a catch-up going on. But conditions in the US, which was the primary market, and which is how many of these stocks initially made their name and they garnered good valuations. Those conditions are not so good. So yeah, there is a catch up. Maybe if you want to progress the discussion forward, you might even include now chemical names. There was a time when for the same reason, China, etc., you had supernormal profits. And then in the last few quarters, when those supernormal profits have gone away, the share prices of many chemical names have come down drastically. Maybe if we have this conversation 3 months from now, you might be referencing some chemical names. So I'm just adding to the debate that there is a catch-up going on. For sure, there is a catch-up going on.
I'm just taking cognizance of the kind of commentary that we've got from a lot of the FMCG companies. Nestle, for instance, saying that there is a softening in commodity prices. Rural growth has been strong. Tata Consumer saying that there are green shoots in the branded tea business and that FY24 will be relatively better than FY23. Marico saying that commodity inflation worries have been easing somewhat. Dabur as well acknowledging that the demand trajectory across both rural as well as urban has shown a slight improvement sequentially. And then, of course, the latest being HUL saying that the rural weakness seems to have bottomed out. Anil, just in light of the kind of management commentary that we've been getting from corporates across the space, Are you as well sensing that we're seeing now signs of these high commodity prices coming off and thereby seeing improved margins?
Yeah, I mean, one cannot second guess these people. They do it for a living on a daily basis. If they are saying prices are coming off, well, I have nothing other than that to say. However, do bear in mind sugar and this milk, etc. They are still pretty high. And then there is this crop failures or those war-related issues regarding rice on a global basis. So those are some of those, problems that could crop up at a later point in time. However, what I have observed is that when the environment changes, the commentary changes. So right now, there is a sense of relief all over the world and in particular in India also. So the commentary also is that, oh, commodities are coming down and we are looking forward to good times. One might even add over here, although you didn't ask me I mean, with this heat wave going on, a lot of consumer durable companies also might be in for a good season. So yeah, we have had a tough period, and going forward, I think we will be earnings will be supported, and by any chance, if there is any relief on the interest rate front, you could have a better market going forward.
Anil, one of the top performance, at least in the month gone by, has been the real estate place, right? Godrej Properties, for instance, month to date is up around 28%. Prestige has piled on gain of around 20%. And even Sobha, Oberoi, DLF, they're all up anywhere between 8 to 20%. Is the move in real estate likely to continue? Because it's been a bit topsy-turvy. We talk about the sector coming out of a slumber, but then the real estate, or rather the rate hikes played spoil sport.
Yeah, so I mean, we are structurally bullish on the real estate sector. By that, let me clarify, we are not bullish on the price of land per square foot. We are bullish on the share prices of home manufacturing companies. So with that caveat, one has to see this sector from a longer term standpoint. The cycles in real estate can be 8 years, 10 years also. So we have just about sort of turned the corner. There are multiple years of growth ahead. And I'm not saying this out of wishful thinking. I'm saying it out of the experience of the past. And that is what I'm projecting into the future. So we've had a long kind of a winter as far as real estate stocks are concerned. Meanwhile, urbanization is going on. The desire of people to work from home leads to need for larger homes, etc., etc. There are multiple drivers. And within the same real estate companies, there is also, many of them have commercial real estate arms where they come out with office space or shopping space, malls, etc. That is the other driver of growth for these companies. There is this term which somebody had very wisely coined: work from India. We say work from home, but this gentleman talks about work from India, and it's all been debated on your channel also, how services growth is growing much more than just the IT services growth in India. So as you have more and more of services growth, there is going to be a demand for quality commercial space, which is why international commercial private equity players are also coming and investing over here in terms of both warehouses as well as office space. So these are the 2, 3, and maybe you can add hotels to the mix. All these things are handled by realty stocks. And I would end by saying that these are longer term, cycles. Interest rates, your guess is as good as mine. But right now, I'm thinking that we are close to the peak of the interest rate cycle. And we have learned over the last many years from tracking HDFC Limited that when the interest rates go up, it is not the end of the world. What the borrower profile in India is much younger in age. So what these housing finance companies do is they extend the tenure. They do not increase the EMI. EMI remains more or less constant. The number of EMIs goes up. And by that device, the higher interest rates can be handled. But still, I mean, given the recent memory of real estate being so bad, real estate stocks being doing so poorly, we keep looking at bearish arguments, and quarter after quarter, these real estate home manufacturing companies are coming out with earnings and numbers that surprise us on the upside. I suspect that will be the case for the next few years.
I appreciate your time. Thank you for joining us. Godrej Consumer on the Raymond deal looks like the exchanges have reached them. This has come on the exchange? I think so. On a deal with Raymond says negotiations are taking place. They are not denying it. It's almost a confirmation. 3:30, Raymond has called a press conference. Godrej Consumer at 3 o'clock informing the stock exchange that negotiations are taking place. So they are not denying it, which means Raymond's today could announce a big news. What the Economic Times today has reported that they are looking at selling their male grooming business. It's a combination of, it's a company where the holding has been held by the promoter and by Raymond's. Half of the stake sale money will come into Raymond's. Half will go to promoter's personal balance sheet. Godrej